Yo, what's good, guys? All right, then. So this video needed to be done. There are a few things that we need to establish. Bitcoin's dropped, but that doesn't mean anything. We're waiting for patterns, guys. Let's go. All right, guys, here we go. Right in front of you, you can see the Bitcoin 4-hour time frame. All right. And let's just talk about the elephant in the room. What a lovely move to the downside. I mean, to me, that is just screaming formation. All right. Now, this is something that we were anticipating. Please don't be assuming that you were surprised with this move. What better time to do it? The weekend. Now, we do say, always, don't trade weekends, don't trade weekends. If you believe that you can see a formation or a pattern developing and you take it, take your trade. You know, it's on you guys. You need to take the responsibility of being aware that when you're messing with the weekends, anything can happen. And if you're okay with that, happy days. All right? But you can't be complaining when this sort of shit happens and catches you off guard. Remember, we're operating in uncertainty, guys. And if you still have a problem with that, this game isn't for you. Straight up. All right? This sort of move establishes the difference between those who are going to last in the game and those who've just come in for fun. The ones that want to make a quick buck, you're going to be out of the game very quick as well. Okay? So let's start with what we know. We know this. Bitcoin, the last time it touched the 200 EMA, she went to the, well, I'm not going to say she went to the moon, but she went on to make highs, all right? She hit the all-time high. Happy days. Let's move back a bit more. Last time she hit the moving averages, she went on to make highs. We seem to see a pattern happening here. Every time she hits the 200 right here, you see, she moves away from it. Now, we've been riding these moves to the upside all the time, coming straight from weekly cycles to the downside, all the way back up to the upside, all right? We're cool with that. Happy days. So, let's consider the following, all right? W formation, rise level 1, rise level 1, retrace, rise level 2, rise level 3, peak formation. Now, someone mentioned today, why are we drawing W's when W's aren't really needed at this point? You know, we always seem to be drawing W's every time we see price doing a formation. Well, this is why we do it, okay? And this is why the importance of confirmation is and must be garnered by everyone when it comes to using this strategy. All right, so let's go across here. Now you can see I've got lines all over the place, but this was the W formation that we were talking about. All right, oh, you can see clearly, right, how they've got, right, the brokers have actually, I need to change the formation of this chart so it's easy for people to view. All right, and here we go. Let's get this sorted out. Here we go. Right, so prior to the weekend, all right, we saw this W formation. Okay, now the reason why we needed to draw this is because there have been many instances in the past where we've seen an M formation occur, and then straight after we see a W formation, and then the W formation plays out. All right, remember, we're operating at the highs right now. All right, now if we consider Bitcoin's behavior prior to this, we know that Bitcoin has been rising for a week. Okay, she's been going W formation, up she goes, rise level 1, rise level 2. Level 2 needed to be confirmed. Look how long the consolidation was. Beautiful consolidation. All right. Rise level 3. Now, rise level 3 just kept on being extended. All right. Now, we see a small WM formation up here. We've got the 2 stopping volume candles right there. Okay. And then price drops. Now, what's great is if the patrons were aware of this and the YouTube subscribers were aware of this and the YouTube members, everyone knew that we were in a level 3 peak formation, all right, and we were just waiting for something to happen. All right, now price did come back down and form support at the 50 EMA. Bounced once, bounced twice, higher than the other previous first leg. Happy days. We've got the great criteria for a W formation, but what do we need? We need confirmation of a clear break away from the formation. All right, that didn't happen. Look what happened. Rise, but it came straight back. All right. What you're wanting to see in a W formation is this sort of behavior. Let me take it back down here. There's a W example. Rise, comes back, break out the zone. Let's go. I mean, that was a bit of a worse, not a great example on that one, but let me go to another W where it's a clean break. There we go. Little W here. Rise, coming out of the zone, retrace back into the 50. All right. Go to another one. Here we go. Rise, coming out of the zone, up it goes again. All right. Let's pull up another W formation for the purpose of understanding. Here we go. W formation, rise out of the zone, retrace. All right. That is the criteria that we are looking for when we are trading M's and W's. Okay. Now, why is it important that you formulate a W formation at the highs? especially at a moving average? Well, I'll tell you why. Because when you apply the confirmation criteria to this, you're going to know where you stand. All right. So on the basis that there's an M formation up here, okay, let me draw that out so it's easy for you guys to witness. This M formation was very small. All right. And that's fine. It's still deemed as a formation. Okay. But what you have to understand is the following. The W formation and the M formation. I've said this time and time again. Go back in the previous streams. You will see this happening over and over again. And one of two things is going to happen. Price is either going to respect the W or it's going to respect the M. And in most cases, we find that the W plays out. Okay? But look, you've got the W formation here. The clue was here. All right? W formation, we are in an extended move to the upside. We know we need to get price back into the zone. Okay? Now, price comes up. I'm not seeing true conviction here. Yeah? Because when it comes up, it instantly pulls back. Taps the high and pulls back, and then it starts trailing towards the 50. That's not really a great confirmation for me. I need price to come completely away from the moving average and trend higher. Then I'm anticipating a retrace back to the 50. Then I have my criteria. Then I have my understanding that I've got the retrace to the 50 and then confirmation, continuation to the upside. That didn't happen. Okay, because look, when it came out, it went above the middle range of the W formation. Okay, if you look, it went above it, but then it instantly came back down again. This next candle was there to induce traders to believe that it was going to continue higher, but then it closed lower. Okay, this is why it's so important you add confirmation to confirmation. Where was the 50? Flat. Where were the 5 and the 13 EMA? The dotted lines here. Okay, price was above it, but price came straight back down again. And we were at also the weekend. Where's the liquidity? It's not there. All right. Then what happens? Price drops and breaks the previous low. Now, we said in the patrons post prior, we said that if this W formation doesn't play out, we will know where we stand with the M formation and the level 3 peak formation fulfillment based on her breaking this zone here. So if you were to enter short purely on the break of this, your trade would have been good. Why? Because drop, rise level 1, retrace, takes out level 1, level 2 confirmed, rise level 2, drop. Okay, so now level 2 is being confirmed. All right. And what do we have? We have a massive drop to the downside, completely taking out so much liquidity. I mean, look at that. How beautiful is that? All right. That is what you call true vector. Okay. But look at the moving averages. Everything is flat. All right. Now they're turned. Okay. But it's flat across the board. It's a fast move, false move. This is a fake move. Because if we were in a true bearish market, as everyone seems to be thinking, all right, the move will be progressive. It will just keep going down and down and down. This fast move here is wild. Okay. It's just another way to absorb liquidity from all the guys that have been holding Bitcoin from Kingdom Come. Okay. A lot of people have been making a lot of coin off this move to the upside. They needed to reset the whole thing. All right. This needed to happen. And what better time to take advantage of it? Over the weekend. Okay. Why am I like this? What is making me come to the chart and have this conversation with everyone? Well, look, do not be surprised by this move. Do not be surprised by it, whether it was news motivated or whatever. Okay, you would have had enough information to understand that if you were going to base your trades on this M or this W, you would have had enough information to make the decision for yourself based on the criteria that is required to either make an entry on the M or the W. All right. We've seen it before. How many times have we seen price make a high, form an M formation, and then come down straight away and form a W formation and then continue higher? All right. Now, if you consider Bitcoin's move to the upside, it has been continuous moving up. And it's got to the point where we were like, right, hold on. At some point, Bitcoin does need to pull back. It does need to pull back. All right. We had an extension to the high. All right. Forgive me all these lines all over the place. I use the same chart to show people what's going on in the stream. So forgive me. So let's just get this tidied up. All right. Get rid of these. Okay. Happy days. All right. Cool. All right. This W formation was only going to be valid if we had a clean move to the upside. All right. It didn't happen. You're waiting for a break, retrace, continuation to the upside. This is the pattern, guys. When price comes out of the W formation, retrace, continuation. Could you have taken this trade? Could you have traded this W formation? Of course you could. Look, very easy. You could have had yourself an advanced entry at this point here. All right? Advanced entry. Right there. Rise out. Happy days. If you're not happy with a move from here all the way to here, okay, even on this notable volume candle right here, okay, full well knowing that we are in an extended move to the upside, all right, level 3 peak formation appears to have been playing out, okay, why couldn't you not have taken a profit from trading at this point here? I know we're talking in hindsight, but there is enough in the streams to help you understand why you could have been able to take a trade from here and closed up here. Remember, this strategy is all about short-term day trading, exploiting the moves, the pushes away and to moving averages. All right? This move, okay, was premeditated by the market makers. They were building their shorts at higher prices. Look, they kept going and going and going. The final push, 1, rise, 2, up it goes. Then they started moving. The stopping volume candles were here. Now, I can't tell you when to enter and when to exit, guys. Remember that. All right. That's why I give you as much information as possible for me to say, right, everyone is charged with the right framework. The rest is on you guys. Don't trade weekends. You understand? Yeah. Rise, retrace, continuation. Wait for the notable volume. Wait for the candle to break. You get the idea. All right. Price pulls away from the moving average. It comes back. We've got a formation. And if you think that you're just going to see a W and just trade it off that basis, you're going to be you're going to lose a lot of money straight up. All right? I always say, add caution to caution. Prepare your position. All right? Is there anything for you to do in this zone? The M formation has shown us. Spike to the high, spike to the high. They pulled it back aggressively. Market makers using the liquidity from the retail trader who believes that Bitcoin is going to continue higher. Gives them the idea that you're going to hit highs. He then starts opening his shorts. He brings price back down to the 50. Buy the pullback. All of that madness. They do buy the pullback. Gives them another reason to believe that there is now a continuation to the upside. Induces them with this green candle. Builds some more shorts at those highs. And then what happens? It drops. All right? Are we getting this, guys? Because if you're surprised about this move, oh, God, there's still more work to be done, which I'm happy to do. Remember, extended peak formation, respect the cycle. In the last stream, we spoke about this, understanding the importance of the cycle. Market makers need to make some money at some point, guys. All right? And funnily enough, where has price retraced to? Let's look. Zoom out. Where has she gone? She's not... This move, look, she's still within the peak formation that we had drawn 2 weeks ago. Rise, there's your week cycle, drop, week cycle, yeah? She's still within the peak formation right there. This isn't price discovery, she's been here before. She's working the previous zones that she'd started building shorts from, all right? Now she's using this opportunity to get longs at the lowest possible price before she starts another move back to the upside. You know, this is not a financial crash, what people are making it out to be, Bitcoin to 10,000, whatever. All right? What you need to understand is there haven't been anywhere that we didn't see him go before. That's the important bit. All right? Now let's consider the ADR as well. This will be very interesting. What is the ADR of this move? Well, we take the ADR from the open of the range, okay, the Asian session, all the way down to this. So watch this. Where are we at? That is 141,796 pip move. It's effectively achieved its ADR, okay, times 3 twice. So it's moved in one session, it's moved the amount of pips that it would normally move in 2 weeks. What it would take it 2 weeks to do, it's achieved in one session. How extended is that? Yeah? This is a clean break. And now they brought it all the way back up. They need to regulate it. So many people have been burnt out. So many people have been burnt out. But what do we understand? We understand that there is a cycle being formed. There is a reset being formed right now. All right? You guys were charged with enough information to understand what was happening here. This is no surprise to you. This is just a level playing out. M formation. Consolidation. If this W formation is going to play out, price needs to break up and go higher. It needs to recover this previous zone for a clean break for us to formulate the rise level 1, retrace continuation to the upside for level 2. That's ideally what we need to see, to confirm that this wasn't an M formation. But what happened? M formation came down, consolidated to the right, rise, stop hunt rise, drop, takes out the previous area. That's level 1. Rise, level 2. Okay, drop. Now we're working level 3. Yeah? This is the level 2 drop. Now we're working level 3. Okay, so we'll start again. Rise level 1, drop. Rise level 2, drop. Rise level 3, drop. Peak formation. Is this what we're expecting? Vector candles to the downside. Yeah? Where are we in relation to the moving averages? Are we going to see this pattern play out? Is this what we're waiting for? Is this the reset? All right. Power of projection. Vector candle 1, 2, and 3. All right. This is not surprising for you guys. Okay. In time, you'll be proficient enough to actually witness this move and be excited that it's happened. Why? Because you know a pattern's going to be forming from it. We had the level 1 cycle. We had the weekly cycle. It's achieved. Happy days. Now we're going into a new session, a new week. M formation, drop, level 1, drop, level 2, drop, level 3, peak formation, up she goes. That's what we anticipate. But what do we need to see? We need to see price coming back up to the 50 EMA. The 50 EMA effectively would form in this direction here. Price would come back up, retrace back down, making sure that she doesn't take out this previous area. And then notable volume we need to come in to bring price further up. The moving averages would edge and start edging up higher. Okay, price would go above that. And then when price moves out of the zone for the W formation, a retrace is expected back to the 50 and then continuation to the upside. And then we start again. All right. This is the importance of understanding why price should not be relevant. You have to be watching what it's doing and not basing your decisions on what price is. All right. So many people are saying that, Bitcoin needs to go to 51, 52, 53, 59, 41, 39. Get that out your head. As pattern watchers, it doesn't matter. You're waiting for the pattern. Stop looking right here. Forget this. All right? How about you start doing things like this? All right? Tell me, how does price affect your decision? Where are we at? None. Okay? Let's have a look. All right? Without the fact that you can still see the labels. Okay? Tell me, how does price influence whether or not you're going to make a decision on a completion of a pattern? All right? That's what I'm trying to say to you guys. Price is irrelevant, all right? All you need to do is understand how it forms itself at key areas. That's what you need to pay attention to. Yeah? Cool. Tonight's stream, we're going to look at this a little bit more, all right? I know some people, especially if people are new to this strategy, by simply thinking you just find an M and a W and trade it, you'll be in for a big surprise, guys, all right? Because that's not how this game works. There are a number of confluences that need to come into play before you can establish whether a W or an M is going to play out. And the amount of times, if you've been watching the streams, the amount of times we've been in the situation where this M formation plays and the W formation is in the same area, what do we know? Well, clear example is, in order for us to verify if this W formation is going to play out, you wait for price to come out of the W formation, take out the previous high, and when it pulls back to a 50-day moving average and continues to move up from there, you've got your confirmation, safety entry trade, or advanced entry trade. Yeah? I know I'm speaking pretty fast, but I'm so frustrated that I'm trying to help people get this, all right? And they feel like it's... it doesn't matter. At the end of the day, guys, we've always got another opportunity, and that's what you need to understand. There is always another pattern to be played. But when you understand the cycle, okay, when you get that when price rises, retrace, rise, retrace, rise, peak formation, it needs to do something else. Why? Because the market makers need to see a return. They need to see a return for giving all the people this money to get their orders filled to the upside, all right? Market maker wants to get his shorts. He's sure got his shorts filled. You know it. At the same time, he's now building longs. All right?
We facilitated this move to the upside, but we've also facilitated it to the downside. All right? So many people got squashed here, man. It's unbelievable, and it's so sad. Yeah? I'll see you in tonight's stream, guys. Peace.